So about a week ago, we got wind that hedge fund manager David Einhorn believes that AI could be a big boost in demand for HP to the point where he took and established a position in the stock. Now, before we get into that article, I do want to look at the charts, and I like to start typically on the monthly chart and work my way down. And this is just a form of multiple frame analysis. And what my eyes gravitate is to this $24 level. Not only is that support resistance, but that is a level of interest from a buyer standpoint. You have a rally in price, one basic candle, then the rally out. So if I draw a zone around that level, you can see when price came back, dipped its feet roughly 60% into the zone before moving higher. Now the fact that you did not take out $34 implies that the next time price comes back, it may or may not hold. So we will put a monthly buyer's level there at, say, 24.25. Now, between 24 and 34, you're in a sideways market. And so buying anywhere between these levels, you're going to expect to get chopped up. Where selling at 34, buying at 24, you have an imbalance between buyers and sellers. Now, within this price range sideways market, you have another level of interest. Very subtle, but it's a rally in price based in candle. And the rally out wasn't explosive, but again, if you wanted to take trades, look for the extremes within the extremes. And in this case, you have, say, weekly buyers in that 27.40 range, which worked once, which was good for maybe a 4-to-1 reward to risk ratio. And as you can see, price is now dipping its toes further in the zone to try to get those unfilled buy orders. See these rejection wicks? That implies more resistance at $34. So I want to look at this little hammer candle on the daily chart just to see what it looks like. So these gaps, consider those extended range candles. So if I was to kind of map it out, it would look like a rally, base in candles, and then a rally out. Price comes back, dips its toes in, shoots higher. Not in love with this formation. However, what you can see is you do have a W pattern. Typically, price likes to come back to the apex, and potentially that's what price is doing now. All right, so to get into the news, again, hedge fund manager David Einhorn believes AI can help computing hardware provider HP out of its sideways consolidation, as we saw on the higher time frames. In a letter, Einhorn wrote that HP stands to benefit from AI, which he believes is not reflected in the current stock price. He believes that they are at a minimum on the cusp of a normal PC refresh cycle, which should drive earnings above estimates. Now, the more exciting opportunities through a possible AI-driven PC adoption cycle, fueling higher unit prices and a more robust PC market recovery, says Einhorn. hedge fund Greenlight came to the main conclusion that the potential for an upside hasn't been reflected in the stock price, and so he has taken a position in the stock. Regarding Wall Street, there are 4 buys, 4 holds, and 2 sells, with an average price of $31, implying a 10% upside potential. The most optimistic bull calls for a $40 price target, which is roughly 42% higher. So kind of zooming back out to the weekly chart. And right now, the level in play is this weekly bias level. But the better play is if you get a sell-off. And we're just talking $4. That's where you would back up the dump truck. Thanks for watching. Subscribe. Please like the video.